What an absolutely amazing trade. Straight to the take profit without a single doubt. This trade was taken on our live trading sessions, and such confidence in this, it's just absolutely unbelievable how simple this trade was and how obvious this trade was to happen. I'm gonna show you the clip of the trade that we have taken and how we analyzed it, of course, on the meeting. And after that, I want to cover some important details regarding some mindset behind the trade and also another important trade management aspect you can also build into your trading system. Now, I think it's very visible that from a recent swing point to a recent swing point, we are able to identify swing point to swing point where we will have to be measuring the fib. And why would it be a better idea right now to most potentially have a swing point fib here to another swing point fib here to most potentially come back towards this area to later drop downwards? Why would it be logical? Number one, it just swept previous week's high. Number two, Asian session reversed the previous week's high, which is a session reversal, and if Asian session is reversing it, very typically the entire day is further reversing. Number three, the massive impulse move still has a likeness to get filled back in. And of course, number four, if the market has to be moving higher later, it does have the chance to, of course, first move towards the 618 and then move higher. So you kind of have a flow of logic in terms of why is it going to be important for the market to be moving lower. And of course, not even mentioning, we already spoke of the fact that this rough estimated point in the market there at that point, this estimated entry here at that point, that target, and of course, market coming back towards close on time, taking an easy trade like that at that point. This is still a potential draw on liquidity. It's very understandable, in my opinion. Definitely potential draw on liquidity. So we can speculate on a selling trade as far as we are getting kills on time. Will the kills on time be important here? Yes, it would be. It would be definitely something to consider. Why is this something to consider? Because and there's the trade. Very smoothly all the way to the take profit. However, I can tell you in the beginning, this trade wasn't as smooth as it looks in hindsight right now, because when the trade was first taken and along the way things were progressing towards the take profit, as we check all the progress step by step, we're gonna notice the price has been absolutely horrific. And this is, of course, due to NFP this week. This week, Friday, we're gonna have NFP, which is absolutely going to be a massive news event. And due to the NFP being on Friday, the pre NFP week, which is all of the days coming of the NFP, things are typically much slower and much more consolidated. So, in the first place, I can definitely tell you it was expected to have a slow price action. But this slow price action is really something that is destroying a lot of traders. This is exactly the thing that is making a lot of traders extremely inconsistent. What happens with a lot of traders is once the trade starts moving to a profit, they just immediately move this stop loss to a break even as soon as they can. And I can just tell you absolutely that you can also tell yourself that how many times you also had a situation where you place a break even, the stop loss is taking your profit, it's also taking you out of the trade, you close at a break even, and eventually later the next day you look back at the trade and you notice the trade has completely gone to your take profit. That happens an unbelievably frequent amount of times. And this is exactly where the mindset comes in. When you take a trade, your mindset has to be you either take the trade or not if the plan is not matching with it. But if you take the trade, it's either stop loss or either take profit. And this tiny bit of information is such a massive, valuable information you're gonna use in your trading, because if you think of how trading is working, everything is based on statistics. And you moving your stop loss to a break even is literally breaking the statistical system of your trading plan. So you gotta stop moving your stop loss to break even. You just gotta let your stop loss at the same position where it was and keep your take profit at the same position where it was and let the market do its job. Just simply let the trade play out as it should be playing out. And that's a very key important fact here. Market kept on consolidating pretty much overnight, and eventually, of course, it did go to a take profit, all the way to a take profit, like roughly 3.5% profit, which is pretty excellent. But really the main important value here that you can understand from this trade, and something you can take away from this information as a very useful, valuable information, is really moving your stop loss to break even. It is just causing more problems than any benefit. Just as this trade, you gotta sit through the position and psychologically simply trust the system of making sure that your position is going to be working out as it should be working out. And of course, it's a completely separate topic that in the first place you gotta have a good trading system, you gotta know what you're doing in the market, so you cannot just do things randomly. And of course, confidence is a great thing, but obviously if you do not know what to do, it doesn't mean anything. So you do need to know how the market works, and you do need to understand every bits and piece of information from the market of what you're supposed to be doing. However, from the psychological perspective, too many traders just back away from their position. They take a trade and they back off from it. They probably lose some confidence because their profit is moving up and down constantly, but that is exactly a very key detail to being consistent in the market. Removing all of those emotions that is affecting you.